The main goal of the video is to show you how to stay on the right side of the market and how to reduce stop hunts and how to spot reversal points. And then the time frames you're going to be using is going to be the H1, is going to be the M15 and the M5. So these are the time frames that we're going to be using, and we are going to be using the lowest lot size possible, which is 0.01, which costs 99 cents. If you convert that into rands, that's probably like 14 or something, so we are going to be scalping this indice, and I will show you how to stay in the right side of the market, how to reduce stop hunts, and how to spot reversal points. So when we're starting, we're gonna start on the higher time frame. So when we start on the higher time frames, we are wanting to see what is happening in the next days, the next hours, we want to forecast what is going to happen into the future. So going down to the lower time frames is it's much more risky. It's really risky because there is a lot of false signals that is generated on the lower time frames, because remember, we are working against the brokers and working against the banks and the institutions and all the financial institutions, right? So we need to start on the high time frame so that we can be able to see and spot out key levels of what reversals. So I'm going to simply take my horizontal line for this visual presentation right now. I'm going to simply do this, and then I'll spot a key level of reversal. So I spotted something over here, right? Let's say we are backtesting right now. So I spotted something over here, which is something like this, which is a pin bar or a type of reversal at this key level over here, right? So I've spotted that level, and then now I'm spotting something else, which was a key level of what support and resistance. It was support and resistance, because first of all, we got our support, which is first touch. Second touch, what happened? It went up a little bit and then broke out of structure and kind of retested, and then now was playing around in a consolidation. So I'm going to be showing you guys how to be able to stay on the right side of the market and to be able to spot some reversal key points. So we know that if the market shows us a support or resistance or whatever, a key level, if it has been tested more times, like 4 or 5 times, it is much more highly riskier for you to probably go in full force or go in aggressively, because the many times a trend line or support or resistance has been touched, the weaker it gets. It's just a true fact that a pure price action trader has to know. So we're going to be going down on the M15 time frame so that we go down on the scaling or the scalping, so we can be able to see what is happening. So first of all, let's say all of the data that is over here, we pretend that we don't see it, right? So what we're concentrating on is this kind of pin bar and that candlestick that has formed. So then we can know that this is a level of what? Key reversal area. Why? Because of that peak over there, right? So we're expecting what? We're expecting some buys a little bit if you are a scalper. So you're going to mark out these certain zones or areas of reversals. Now you're going to go down to the M15, and once you're going down on the M15, now we're over here going down on the M15. Remember, on the H1 we said we're going to be concentrating on this peak over here. So we're starting to see structure. So we are going to be waiting for it to get to our horizontal trend line over here, and we're going to be expecting what? For sells or major sells on that, right? So how do you do that? So in order for you to be able to spot out that certain type of pattern, there's certain type of patterns which I'm going to be popping out on the screen right now. All right, do you see them? These are patterns that you need to understand. These are patterns that you need to be able to spot out. So can only be spot out when you have practiced them, right? So I think I'm gonna put a link or somewhere, or I don't know if I'm gonna have like a Telegram where I'm gonna be putting these certain PDFs that are actually you need to pay for them, but then you can get them for free. Not everyone can afford to pay a ridiculous amount for a certain PDF that is only 2 megabytes. Come on. So I'm going to be putting that on that certain type of Telegram, and we're going to be going on the M5, And when we're going on the M5, we want to scalp, we want to see or spot opportunities. So overall, we're going to be waiting for price to what, to head to our horizontal trend line over here, right? Price to go to that horizontal trend line. Remember, on the high time frame, which is the H1, that is a key level of reversal, so we spotted out that level, right? So we wouldn't just enter at that point over here. Why? Because now we have something called manipulation, or something called stop hunts. So stop hunts is basically you being taken out by the institutions and traders. They know the overall price action, the overall structure is known to be that this is a selling market. Why? Because of a certain pattern that we are following, which we are getting some high lows, you're getting some high lows, lower highs, and higher lows, so it's all price action that you need to do. So in order for you to stay out of the market, stay on the right side of the market, you're basically going to be marking out a trend line like this. So you're gonna take on that trend line over here, which is a support, which counts as your demand zone, right? So you're gonna do that, and then you're gonna drag it across to that second or third peak over here. So we remember that we're looking for a certain type of pattern leading to a high time frame confirmation, which is H1. H1 is saying what? We're going to be selling. Why? Because first of all, we are going to be retesting on that support level. We're going to be retesting on that level. We're going to be retesting on that level, going down to the downside. So we're going to be going back to the M5. Okay, going back to the M5. Okay, so we marked out a certain pattern, so you can be extra, and if you really want to spot out that pattern, sorry, I don't know what this thing is doing, man. Okay, like that. Okay, so you're spotting a certain pattern like that. Okay, so when you're spotting a certain pattern that is leading to that, we know that this is an upward movement, which is an ascending channel. The ascending channel, we know that there's more probabilities that the market would start selling, right? And look what happened. Market price obeyed what was happening on the high time frame, and then you would have found an entry point over here and enter over there, or you either have an entry point over there and have a stop loss up, up there, so that you avoid some stop hunts. But then if the market tells you that this thing is going to be selling, or this thing is going to be buying, whilst you're on the opposite side of the market, just get out of the trade and continue to look or seek for other opportunities that are needed. So look at what happened when I was spotted that this is an overall sell. What happened? The market started selling hard. Market started selling very, very hard. So this is what you are supposed to do in order to be able to scalp VIX 75 on the higher time frames. On the lower time frames, you're going to be using the higher time frames to your advantage, because you want to be able to forecast and predict what is happening on the higher time frames, what is happening on the lower time frames. So in order to be able to know what is happening on the lower time frames, you need to know what's happening on the higher time frames. The higher time frames, I'm telling you, do lie less than the lower time frames, because people know, the banks or the institutions know, that people want to make a quick profit, and they affect your psychology through that, using lower time frames and generating some false signals, and generating some signals that you think are powerful. Yes, they are powerful, but they're not powerful at that time. Why? Because you don't have a confluence of the higher time frames, which is really key and important to your trading. So I hope this helps you, and I don't want this video to be very long, so drop some comments below if you want me to show you trading a live account. If you're wondering what type of broker I use Deriv. You can click the link below, or you can just go to the website and and trade the synthetic indices as you want to. Hope you enjoy your day, and let's kill the markets.